we will be discussing about the entire overall market levels. Yes, as of now, Indian markets are at an all-time high. We have been discussing from the last couple of months. In many of our discussions, we have seen India is growing and one of the strong market environment where not only the domestic institutional investors, foreign institutional investors are also eyeing at it. So yes, we have our Nifty 50 at all-time high. We have our mid-cap index at all-time high, small cap index at an all time high, right? Apart from the index at all time high, there are many companies which have done extraordinarily well and has created wealth for majority of the investors who are following the process. So in this discussion, we will see be the actionables when the markets are at an all time high, right? So that would be our main theme of discussion for today. So let me share my screen. So yes, let's discuss about the key actionables when markets are at an all time high. So we'll be focusing our discussion in three parts. First, the Sensex movement to 74,000 and above, right? As of now, the Sensex is more than 74,000, 74,500 and above. Second, how to have a successful entry into stocks, how to have successful entry into companies. Third, position sizing and why do we need it, right? Why do we need it? Say yes, any market, there are companies which will be moving up or which will be moving down. It can be either a bullish stocks or bearish stocks. So why position sizing is more important, we'll be discussing, right? So on these three pillars, we will be deep diving today. First of all, yes, Sensex movement to 74,000. Now, if you see the entire movement of Sensex from the base of 100 to 37,000 levels, it took almost 23 years, right? It took almost 23 years. And the next 37,000, it just took 36 months in the last 3 years, right? Now, going forward from the present levels to the next 37,000, it can happen in 1 year, it can happen in 1.5 years, right? So the market dynamics are more changing, right? And now, yes, you may feel 37,000 in 23 years and the same 37,000 in 36 months. So the numbers are correct. Now, how do you perceive it, right? What is your perception will be differing. First of all, the first 37,000 in 23 years means it's almost 325x, right? It's like a 325 times is the returns we have got considering the Sensex base as 100. And the last 37,000, when it took 3 years, it means your investment has doubled, right? Your investment has doubled. And now, with these numbers in place, what are the key pointers which we should be considering? First of all, time in the market is more important than timing the market. Yes, there are many investors and traders who are there. I wish to have stock market as at a low. That is the position where I'll take entry. I'll be exiting my stocks when the market is at an all-time high, right? So targeting low or high, no one can decide. Even 3 months, 6 months before, there was a lot of news on social media, Twitter, LinkedIn, Telegram, that markets are at an all-time high. There would be recession. So it's better to book the entire portfolio. So whoever have redeemed their portfolios would be knowing the pain of it now, right? So never target the market lows or the market highs. You should be in the market, and based on the decisions, based on the movement in the market, you have to place your decisions, right? So time in the market is more important than timing the low and timing the high. Second, find good quality companies in their early stages of growth and stay invested for long term to create wealth, right? So wealth creation is a process, right? Is a process. So yes, It is something where you keep on building, identifying good companies, adding them, increasing the position sizing is more important. Third, yes, even though it took 36 months for the Sensex to double itself or give a 2x returns, there are many strong or even quality companies have given multifold returns. You look at your KA Industries, right? Your Varun Beverages Limited, Titan, Trent, Solar Industries, right? Cochin Shipyard Limited, Hindustan Aeronautics Limited. There are like n number of companies which has given extraordinary returns, even though market has doubled 2x in the last 3 years. So yes, identifying quality companies and staying invested is more important. And lastly, nothing is more expensive than missed opportunities, right? Yeah, this is little difficult to digest, but yes, that's the fact. Nothing is more expensive than missed opportunities. Whoever times the market, whoever wanted to enter at the lowest and wanted to exit at the highest would be in a scenario wherein they will be out of the market. And there are few days which are important where we can grab the entire returns. So yes, it's more important to be in the market than being out of the market. You can time entry into stocks and exit into stocks, but don't time the market. Always be in the market. Second, how do we have a successful entry into stocks? First, your investments should be in tranches, not in lump sum, right? Not in lump sum. So the first entry when you are doing, your first entry should be a not significant amount you should invest. Like for example, sir, I have an overall portfolio of 10 lakhs. Your first investment should be 1% or 2% of the portfolio. So your entire stocks portfolio is 10 lakhs. Your first entry would be 10,000 or 20,000 max. And from there, gradually you spike it up, right? You spike it up because your buying decision, you should treat it like a continuous process. You have to evaluate the price and the probability equation, right? So you enter into a stock lump sum, and once the stock moves, yes, you're always happy. But if the stock declines, that is enough to entirely screw your portfolio. Rather, if you consider buying as a continuous process and you evaluate the stock, you evaluate the price movement, you evaluate the probability equation of the company, and you add in tranches. So those chunks, when you're adding 2-3 stocks in your portfolio, is sufficient to increase the alpha, is sufficient to increase the returns in your overall portfolio. And lastly, when you believe the price and probability equation is favorable and your conviction is validated, that is the time you keep averaging up and enhancing your investment. Like let's say right now, in April 2024, right? The second week and the third week is more important because we get a lot of quarterly results of Q4, January, February, March 2024, you get the quarterly results. So those companies which are already there in your portfolio, where you're already in profits, right? And once the quarterly results are also coming up, the second week and third week is more important for the quarterly data of majority of the companies, right? If the quarterly data is good and your validation is getting more confirmed, so apart from you looking at stocks outside your portfolio, within the portfolio itself, you can add more positions. You can increase the position sizing, right? You can increase the position sizing, and rather than adding in lump sum, always add in tranches and average up and increase your position, right? Increase your position. Now, position sizing, the third pillar for the actionables when markets at all-time high. Why do we need it, right? Why do we need it? Position sizing means why we need to add on the winners and make it a big win, right? And make it a big win. I'll explain this with a table, right? I'll explain this with a table. Now let's say you have two things in your control. One, stock selection, it can either be right or it can be wrong. Similarly, position sizing means increasing your position in a particular stock. It can either be right or it can be wrong. Now, if you are selecting the right stock, yes, you have entered into a stronger company where it is even picking up more strength. And if your position sizing is good, means you are increasing the position. Sir, 1 year before, I have identified the electrical wire products companies where there is a lot of strength picking up. So I've added KEI Industries. Yes, your stock selection is right. One criteria is met. And as you are tracking the quarterly data, and if the stock price is also increasing, every opportunity, you have to keep increasing your position. So when the stock selection is good and the position sizing is good, that leads to a multi-bagger. And you don't require many multi-baggers in your portfolio. You need couple of multi-baggers, 3-4 multi-baggers in your portfolio will take your returns, your overall portfolio returns to more than 30, more than 40% returns. On the other side, sir, I've selected the right stock, KA Industries, or even your any example, your Apar Industries, right? Any example, or even your VBL, your Trend, Titan, any company which you have taken and has been doing well. But unfortunately, I've not been able to track it, and I did not increase the position. I've just added one position, and that is going as it is. That is a missed opportunity. So first, before going and checking the stocks apart from your portfolio, you're hunting the stocks in the market. First, check what is the opportunity I have in my existing portfolio where I can add, where it is picking more strength. Because when you're picking right stocks and missing on the position sizing, that is a missed opportunity. Now, when your stock selection is wrong, and there is nothing to feel bad about it. Yes, I repeat, there is nothing to feel bad about picking a wrong stock, because we are not God. And no one here will have 100% win rate. That is the basic nature of stock market. Market always teaches us. So it's not wrong to pick wrong stocks, but important is you should not catch a falling knife, or you should not average down. So let's say you have selected a wrong stock. Sir, my entry has been wrong, or I have entered into a company, but it has started declining. And you are doing one more mistake of increasing the position sizing. Yes, what happens psychology wise, if you are losing 10% and you are again further losing another 5 more or even 10 more percentage or 20% loss, human psychology says, let me add more as it has already declined 20%, will again recover. So I'm again entering at a lower price. So this continues. What if the stock loses its fundamental characteristics and has some more pain in the stock and it declines? And when you are doing averaging down and when you are picking a falling knife, definitely you will cut your hand. And when you are picking a wrong stock, your portfolio will bleed. When the stock selection is wrong and the position sizing is also wrong, when you're averaging down, that leads to big loss, right? That leads to big loss. Whereas, sir, I've entered a wrong stock and position sizing wise, you are right. Means you are either exiting the stock as early as possible, or you're not adding anything. You're just waiting, right? At least you'll get a satisfactory results, right? Satisfactory results. So the final learning or the end summary of it is, when you are in the right path of stock selection, when you are winning, make it big, right? Make it big, increase your position sizing. And when you are wrong, exit the position as early as possible so that you need not incur heavy losses there, right? Heavy losses there. So the final agenda for an investor to be is win big and lose less, right? Win big and lose less. So that is how you'll be succeeding. To just summarize, when markets at a, when markets are at an all-time high, yes, even though market have doubled in the last 3 years, right? There are many companies which have given multi-bagger returns. It's all about identifying the stocks at the right time and increasing the positions. And when you are entering into the stocks, need not do lump sum investment, add in tranches, and ensure once your validation is confirmed, add more into that, right? Add more into the tranches. Third most important, position sizing. Simply means when you are winning, win big. When you are losing, cut your losers ASAP, as soon as possible, right? As soon as possible. So now, what are those things which you have been missing till date? Let me know below. Sir, yes, these are certain things which I have not been doing, which I'll implement from today to ensure I grab the entire potential in the Indian market, right? So let me know below what are the things you have been missing in these pointers which we have discussed today.